Hot
All
mic.
right.
Mics are hot.
Mics are hot. People are hot.
What's up, guys? Hello, hello, world. We're back after a long hiatus,
We survived, baby.
after a pandemic and a what do they call it? Snowpocalypse.
No ice apocalypse.
Icepocalypse. And
Yeah.
travel and holy shit, we're back and ready to go.
Let me just say, people that live up north, if you were making fun of us because we can't survive when we get ice and snow, it's so different down here. It's really crazy. We're not prepared for this stuff.
We are definitely not prepared, and that's why the state of Texas literally shut down for a week. We're sitting in Austin with no electricity, no water,
No heat.
very, very strange times.
It was like, what, probably 35, 40 degrees in this room last week?
Yeah.
Insane. Well, look, we are happy to be back. It's been a long time since we've been back in the studio, but man, it's good to be here.
Good to be back, baby.
Let's do it.
And the markets are correcting and everyone's freaking out and losing their minds. So this is probably good timing.
Yeah, you guys know, like, Bitcoin's dead now. Like, it's over. Pack it up. Let's
I
go
actually
home.
tweeted today a reminder that, like, market corrections are healthy in case anybody forgot.
Yeah.
I know we haven't been around for a few weeks, but
All the TikTok investors aren't used to seeing red on their screen.
Yeah.
Yeah. They're like, wait, this is not good. Why the hell is this happening to me?
yeah.
I'm
Man.
ruined.
Well, hey guys, thanks for being with us. How's the audio? If you guys that are here live with us, if you can just give us a thumbs up or a hell yeah in the chat if you can hear us okay and the audio sounds good. The studio was completely destroyed and torn apart, and we've kind of pieced it back together. So hopefully everything's working properly.
Check.
Yeah, let us know, guys. Can you hear all of us?
Yes. All right. Well, thank you guys for being here. We've actually got a ton to cover. Bitcoin's on the move after making some massive gains over the past couple of months. We've been seeing a pullback, and stocks, they've been wild. I know you guys have had a lot of volatility on that side of things too, so we can just go ahead and jump right into it.
Let's do it.
Yeah.
What stonks?
Well, I don't know. We can start wherever you guys want. Actually,
Yeah.
I think we should start with something kind of fun yet irritating.
Oh, God.
Okay, so let's back up a minute. Let's give a little bit of context to what's happened. Okay, so last year we got heavy long Bitcoin again, and we had a big breakout, basically above 10,000. And once we broke this 10K zone, 10 or 12K zone, it's basically just been mostly straight up, right? We went from 12K to 40,000 with hardly any pullback. And then we had a 30% pullback here last month. And then right now we're down, I think, a little over 20% from the all-time high. And so because of that, a lot of people have made a lot of money. Also, altcoins have been hot. But every time we go into a bull market, we start attracting the get rich quick crowd. People that basically hop on the bandwagon. They're kind of late to the game and they just think it's, so easy to get rich. And every market cycle, I get a little more like stressed out by this stuff because I know how it ends. And I know, technology evolves, but human nature doesn't, right? That's why markets go up and down. And so this is something I tweeted the other day. I was like, this is giving me PTSD flashbacks from the market cycle in 2013 and 17. Hopefully the audio works here. I'll just play this real quick.
Stop. If you're watching this, then you're signed to get into cryptocurrency now. This is what I need this Monday. This is my crypto account with Binance, and I just made $7,874 US this morning. I've withdrawn multiple times.
Multiple withdrawals.
Zero work.
Zero work. Automatic.
Automatic.
Oh, God.
This is the power of AI technology.
This is the power of AI technology.
Oh my God.
These
Hopefully-
people are going to lose all their money.
Oh yeah, it happens every time. Oh my God, I'm getting so rich and I didn't even do anything. Look at my paper gains.
Oh man, this reminds me a lot of the cringy one that we saw a couple weeks ago with the guy and his wife Let me just talk about how we make money to fund our lifestyle. I put in $400 or $500, and then I just buy stocks when they're going up, and I just sell stocks when they're going down. It's that easy. I made $20,000 last month. You're like, okay, let's do this math.
2,000% returns in both months that they talked about.
Yeah.
Okay.
You're like, who are these clowns?
Yes. So look, I don't really like to shit on people, but when you see ridiculous stuff like this, the reason why this is so bad is I don't care if this chick loses money, but it's the people that follow her in. Like somebody somewhere I saw like posted all the comments, and people were like, sis, teach me, how do I get in? How do I get in? And I don't know what scam she's running, because she's like, contact me.
AI technology. She looks like an AI expert.
Yeah. So the problem I have with this is the people that get led to slaughter. Yeah. Right. Yeah. And this is why we talk about market cycles, and why, I also dog on the moon boys that are like, buy at any price and, leverage up and don't care. Like, sure, you could get lucky, but the odds are not in your favor. The odds are if you chase and you buy high, and you're going to panic and sell low, even if you go in with the hodler mentality, right? We've been talking about this for months and months. And that's why the title of this show, what is the title of this show? How to Harvest Profits During a Bull Market, right? We trade in and out of this, and we profit and grow our wealth by buying when nobody wants to and selling when everybody's buying. It sounds really, really simple, but it's not easy to do, because it takes mental fortitude and it takes discipline, right? That's the hard part about trading and investing. So I know on the crypto side, I've been taking a lot of profit recently. I'm still holding large positions, but that's why, like, we never know how far bull markets are going to go. Oftentimes they go much further than we expect, and then the pullbacks are much deeper than we expect, right? What about on the stock side? What have you guys been doing?
I've actually been taking profits and building my cash position up over the past few months. There's been a lot of stocks that have, run pretty far, pretty fast, and swing trades that I was in that went way beyond my expectations. And so I've been wanting to build up a cash position for this time, because the market environment is eventually going to shift, like we're kind of seeing happening right now as bond yields rise and the stock market's getting a little frothy, and things are starting to cool down in the momentum world and the growth world. And I want to be ready for that. So I've been taking profits.
So YOLO Tesla puts, what's the deal?
I mean, we've been on this show for over a year talking about, some of the things that like kind of concern us about some of the stuff that's happened in stocks, and some areas that we've have long thought were kind of dangerous. And that includes Tesla stock, to be fair. And congrats to people who were up 700% last year on Tesla, but those are not normal types of returns, right? And when you have stock prices get so far ahead of fundamentals in so many different ways, and you also have this reflexivity with like now Tesla and MicroStrategy and companies like that investing in crypto, you start to cross-pollinate this volatility. So everything starts to get leveraged together. It starts to get like, correlated together. And if you have sell-offs in assets like crypto and then stocks, then they can happen really far, really fast. And, you just have to go back to times like the dot-com bubble too. People think that they're going to have time to get out. In 1 month, in, I believe it was March 2000, there were a significant amount of the dot-com stocks were down 50 to 75% in 1 month. So if you think you're going to squeeze out of the door before everyone else, you may be able to do that, but chances are probably not.
Yeah.
So we've been harvesting profits on the stuff that we own that's up a lot, that we think has gone too far above its fundamental value. And we tend to hold runner positions to do what you said, which is to still be able to capture some of the upside move if it continues to go far beyond like what we think it will. So some of the stuff that I've been doing on that specifically was like last fall, for instance, some of the hotter like SPACs that we got into early, like SSPK and SBE, that were up several 100% within a matter of weeks. I was taking profits on the way up. MWK, Mohawk Group, that was a stock I bought at mid sevens. Stock has gone to almost 50 in like 3 months. So there's a couple points along the way where I've been taking profit, and that does a couple things for you. One, it helps to free up cash in your portfolio for other stuff that isn't going parabolic. And it allows you to take out your cost basis. It allows you to minimize regret, because if you still have that position up there and then it goes down 50%, you're going to be feeling really terrible.
Yeah. That's the thing with bull markets is like you're walking this tightrope where on one side it's like you don't want to close too early and then miss out on big gains, but you also don't want to stay around too long and end up, you know, upside down or holding through a 50 or an 80% drawdown, right? Because what happens in the markets, and we always say like, you know, the markets take the stairs up and then the elevator down, right? And the reason why that happens is because fear is a stronger emotion than greed. And if you think of the markets like a movie theater, right, where, you know, say there's a great movie on and the movie's called Bitcoin, and you have some early adopters that come in the game and they get, you know, tickets at cheap prices, and they come in and they're like, man, this movie is the best movie, and it becomes more popular, and then more and more people funnel into the movie theater, and then it's packed, and then all of a sudden, you know, you feel like you're kind of at the end of the movie, and the credits start to come on, and one or two people kind of leave out of the emergency exits, and then all of a sudden somebody screams, fire, or the movie's over, and then everybody rushes for the exit at the same time, and it gets jammed up. That's why you get those really ridiculous big red candles.
It's like the grocery store. What we've seen with the grocery store, everyone raiding
everybody
the
rushes
grocery
in.
stores. Everyone rushes in, and it's just fast. And then before you know it, there's nothing there.
Yeah, it's so true. Yeah, it's interesting. I think, you know, we have the benefit too of having been in the markets for, you know, 2 decades or so now, and also, you know, I spent a lot of time studying the .com bubble over the past year or so, and unfortunately, a lot of people are going to learn the hard lessons that they have to learn because this is their first cycle.
Yeah.
But like you said before, like these things, they never repeat themselves exactly, but there's a lot of rhyming that happens over time in markets. A lot of the same human behaviors show up over time. So, you know, I encourage you, like, if you feel like you are, you know, sitting on lots of paper gains and it's starting to make you really nervous, you need to like think about those emotions and think about the regret that you would have if all of a sudden your portfolio takes a 40 to 50% drawdown in the next 3 months.
Yeah. That's one thing that's hard to try to conceptualize on the way up, right? Like, say you grew, I'm just going to use round numbers, $100,000 portfolio into $1 million, and you're like, wow, yay, I'm a millionaire now. And then you're like, okay, that's actually stressful because now what do I do, right? Like, I like the narrative behind Bitcoin, but does it make sense to sell and then incur, you know, taxes? Am I going to sell too early, right? So for me, at least, I experience more stress on the way up than taking a drawdown, because drawdowns are easy if you predefine your risk, right? But on the way up, you're like, okay, it's a balancing act between being too aggressive and too, you know, confident and getting, you know, too big of sizes. And then on the other side, you've got hesitation and fear and undersizing positions.
Yeah. And the problem is you can never be perfect with selling. You know, most people can't, right?
Yeah.
There's always going to be, that's why we say the meat of the move. Get the meat of the move. That's what's important, and just manage it to the best of your abilities that you don't have those regrets.
Yeah.
But perfection does not exist.
Exactly. Yeah. So let's just jump into the charts and give a little context as to what's happened. So if we look at a weekly chart of Bitcoin, and let's just kind of look at what happened over the past year. So actually, we're coming up on a year when the markets kind of across the board, crypto, stocks, everything kind of panicked in early March when the coronavirus fears were really heating up. And we were actually counter trading this. So we were buying in, building into a long position throughout the rest of the year. Took a little profit, kind of traded in and out of this chop, but this was the heaviest I'd gotten in Bitcoin ever. And on the run up, you know, what I like to do, and this is kind of with the theme of the how to harvest profits in a bull market, is you want to predefine profit targets, right? So what that means is when price is breaking out, and you're down in, say, like the 10 or the 12K zone, you want to map out ahead of time where you're going to take profit. And you can do that with different forms of TA or even fundamental analysis, looking at market cap numbers and stuff like that. But what that does for you is if you predefine targets that, especially if it's above a new all-time high, you really have, no prior price action to use as resistance. So what do? Well, there's a few tools that I really like to use. One is called the Fibonacci extension tool. So this is how I find, basically by measuring runs and retracements, you can find profit targets into the future. And then also I use measured moves and fractals and waves, but by using a combination of those, you can more accurately pinpoint high probability pivot points, meaning areas in the market where you're likely to get some selling. So what I did is, I trade around these consolidation zones. So again, was heavy long through like the 10K was my average price range, got up into 37. 37 was actually my predefined profit target, my first profit target from back here. So once we got there, what do? I scale some out. I don't sell everything, but because we hit my profit target, I like to take some off the table. And then I traded in, I bought a little, sold a little. And then yesterday, actually, so we're on a weekly chart. If I go down to a daily chart, I actually sold more at 53K. Because why? This was my second profit target that I had mapped out from the beginning of the year. So it's really about, again, predefining those areas, because if you're just waiting, and you're like, well, let me see how high this is going to go. If you don't sell into some kind of strength, you're likely going to be rushing for the exit at the same time as everybody else. And that's the worst time to sell, is when you're getting market orders that are just hitting the books and prices like going down 1% every other minute or whatever, right? Like, you don't want to be a part of that exit. You want to be selling into the get rich quick TikTokers. Like, that's who you want to be selling to.
Yes.
I will say, though, I understand people's frustrations with Bitcoin specifically on trying to figure out when to sell, because we're at all-time highs. This is a brand new asset that we're still learning how it's going to work and function. We have some fundamental things we can go off, but it's just so different than the stock market, where the stock market, we've got PE ratios. We can look at projected earnings. We can look at actual earnings. We can kind of know when the market's gone too far fundamentally on both sides. And with Bitcoin, I do understand people's frustrations with trying to time that sell. I don't know. Any tips for that?
I mean, so that's where I think multiple capital buckets come in.
And scaling.
Yeah. So I have, what I call my cold storage, which is every time we're in an accumulation phase, I buy Bitcoin and I'm never going to sell it. I stuff it away. I can't get to it. It's going to take me a day's worth of travel to get to it. That's my cold storage. I'm not speculating on price moves. I'm getting the lowest cost basis I can and building that position over time. The second bucket is like multi-year trades, buying at 10K, scaling out into 40, 50, 100K, whatever. And then we have like shorter term, for dip buys, for breakout trades, stuff like that. You don't have to do all those strategies, but just understanding that the skill stack is the same for all of them. People that say, oh, trading is bad, just hodl. Yeah, bullshit. 99% of people that say they're just going to hodl, they end up being those people that react emotionally. And how do I know that? I've heard from thousands of people over the past 8 years that have done that. So be careful if somebody's sitting there going, no, I can stomach an 80% drawdown. If you can, that's cool. But this is where having different strategies and time horizons and kind of diversifying your capital buckets can be really, really helpful and remove a lot of the stress.
Yeah, I think that's a great tip.
We do the same. Not every time, but a lot of times with some of the stocks that we hold. So we have, like Nikki said, ways to value our companies fundamentally that give us kind of an idea of where our target ranges might be for valuations. So when a stock goes up, especially very quickly above those ranges, we'll take some profits. But there's also positions that I want to have like at least some core holding in that I continue to hold, even if the stock is way above fair value. And so I actually mentioned earlier the hotter SPACs that we got in that ran up a lot quickly, like SBE and SSPK. And those are both positions where the companies are still very early on in their growth phases. And so these can still be very, very large companies and be much, much bigger companies longer term in terms of total market cap. They are going to look really expensive on current numbers, looking at 2021, 2022. But if you look out and these companies can execute into, say, 2027, 2030, these are huge markets they're playing in and very interesting business models. So I want to hold some of this, even if this, SBE goes to 50 or SSPK goes to 30 or 40 bucks a share. Chances are, yeah, I'm taking some profit along the way, but I'm also going to try to hold a core kind of runner position so that I don't totally get out and then kick myself if it just never has the correction for me to get back in for the long term.
Yeah.
Yeah. There's just still so much to be seen with something like this, and there's many stocks like that.
Yeah.
So
One point that you reminded me of that I just want to remind people, like, why the hell should you even attempt to time the markets, right? Especially in Bitcoin. Like, some people that come into it, they go, okay, I get the story, right? I know it's hot. Wall Street's jumping on board, whatever. Why would I try to buy and sell it? And why not just buy and like hold it forever? Well, you can do that, and your gains are limited to the gains that it goes up over time. But Bitcoin is so volatile, meaning it has so much, bull market and then deep retracements. By being active, you can actually build your capital base a lot faster than just buying and holding, right? So if you buy at 10,000, sell it, 50,000, and then you're able to buy back with a larger capital base when prices come down again. That's how you basically just inject your gains with a little bit of juice.
And that's compounding at its core. I mean, that's what compounding, that's why we do take profits on, you nailed it. That's why we do take profits on stocks if they move too far too fast, because we can take capital out. It becomes part of, you've essentially grown your capital and actually realize those gains. And then if it does have further corrections, you're able to get back in and have more shares. Or you can use that capital to invest in something else that's more undervalued that has the opportunity to give you like higher returns. And so, yeah, it's allowing you to harvest gains and be able to compound at a consistent high rate over time.
Yeah. And obviously there's considerations like, slippage and taxes and
for sure.
And you just might suck at trading.
And skill set.
And skill set. Yeah. Like a lot of people aren't naturally born with the skill set of trading. It's something that takes
you have to fine tune it. Yeah.
Yeah. I mean, or you're going to end up like these people on TikTok that think it's just like shooting fish in a barrel, which sometimes it can feel like that. But if you think it's always going to be like that, you're going to end up like the Wall Street bettors where your equity curve goes up and then it crashes to nothing.
Yeah. If you look at the greatest investors, at least in stocks of all time, people like Warren Buffett or some of the great hedge funds of the world that have compounded capital for 2 decades, the growth of their portfolios looks like this. And it is kind of an exponential curve, but it's relatively smooth. You'll have some drawdowns in there, but it's relatively smooth because they'll consistently compound at 20 to 30% a year. Some years a little lower, some years a little higher, but you don't see them getting, you've never seen Warren Buffett be up 300% one year, down 50 the next, up 200 the next, you know what I mean? It's 20 to 30% consistently year after year after year. And that's actually what we're trying to do, or at least I know what I'm trying to do is my goal is to compound the overall portfolio at 20 to 25% a year. That doesn't sound like a lot. Look at where that gets you after 10, 20, 30 years. It's like
that's
many multiples of your initial capital. And it's achievable. It's like you don't have to hit every parabolic stock or every 500% gainer. You don't have to go take crazy risks. You can look for the asymmetric reward to risk, and you can even have cash in your portfolio. You can. There's a lot of flexibility that gives you if you have a reasonable level of like consistent compounded return you're aiming for.
100%, man. And that's real wealth, right? That's like big money. Like we've had, so I've heard from dozens of our community members that are like, I hit, my life income goal or my life wealth goal, or I made $1 million or $10 million, whatever it is. Like
snaps for that.
Yeah. Like literally over the past couple of months, just dozens of people going, hey, I was here during, the 17 boom and bust and I stuck stuck with it and I was disciplined, and now I'm a multimillionaire for the first time in my life, right? Like that's what gets me juiced every day. But those people, like I see the behavior of people that actually do that and the behavior of people that pop and flop, right? It's like impatience and wanting quick returns and wanting to follow these TikTok idiots. Like that's what gets you run over in the short term and takes you out of the game. That's why we say first learn how to survive and then thrive. Right?
For sure.
So yeah, why don't we just dive into more markets and look at the charts? You know, it's always nice to kind of talk, I think, about the theory and the concepts and how this stuff works, and then actually apply it on the chart. So let's jump back into Bitcoin real quick.
The people want to know where are you going to buy the dip?
Yeah, where do I buy? Where do I sell? So first of all, let's just give a little context as to where we are right now. So we've gone from 10K to almost 60K. So a massive run, you know, call it, you know, 350, 400% from the breakout, even more so from the lows of last year. But you can see we're making runs and retracements. And this last pullback, after we topped out at, what was it, 41K? We pulled back about 30%. And then as of today, let's see, we're down about, call it 25% or so off of the all-time high. If we go back to 2017, just to give some context, during this bull run, which basically started in late 2015, we had 7 pullbacks that were over 30%. So the market really got started here after we broke out of the 200 range, went to 5, had a 40% pullback. Then shortly after that, we had a pullback from 700, also 40%. And then, you know, we had just time after time, run retracement, 35%, almost 40%, right? Until finally, the market went parabolic and went from basically 8K to almost 20K in just a few weeks. That was unsustainable. And then we had a multi-year bear market, right? And these, obviously, in hindsight, when the market is down 70, 80% or more off of its highs, those are historically the best times to buy Bitcoin for the smallest drawdowns. That's when I like to accumulate and stuff it away, right? And then when things are up here, this is what we call harvest season. I don't know where the top is. You know, I would love to see 6-figure prices, and I will have a significant position if that happens, but I'm not going to hold the whole position along the way. And I'm willing to give up the future potential gains to take cash out and put it in other things today, right? And look, we're not financial advisors, you know, we're not investment advisors. We can't give personalized financial advice. But one thing I'll just say in general is if you have made a life-changing amount of money that can change the quality of your daily life for the rest of your life, maybe think about taking some of that and putting it in fiat. That way, if you can't stomach an 80% drawdown, you have something that can sustain your lifestyle, right?
It's simple risk management. It's by doing that strategy, it's mitigating the risk of the unknown. There are so many unknowns. Like you don't know how far this stuff is going to go. 100%. So that's really important to consider depending on how much you are up in your position.
Where do you consider making the position bigger again?
So during a bull market, there's really 2 or 3 types of setups that I look for. I love 30% or more washouts. I didn't buy much on this last one. I actually was a net seller, so I lightened my position here in the 30K. But if we can get, like, if you can, anybody can back test this. If you get a 30% or more pullback over the course of like 2 to 4 days, that tends to historically be a great buying opportunity for a bounce play. Now, I'm not going to hold that whole position. Sometimes I'll sell half on the first bounce, but that's a great play. And also breakouts. So if we go back to the chart, you can see here on February 8th, we had a breakout of the all-time high. I didn't catch this. This was actually kind of what I call a white swan event where, you know, Tesla came out and they said we bought $1.5 billion worth of Bitcoin, and this thing jumped like 15% in an hour or two. So I didn't catch this one. I was still sleeping or something. But you know, when you break that all-time high, there's specific price patterns that can help you get in with solid risk to reward. So I like fast dips. I also like, you know, kind of after a multi-month extended bear trend, when you start to base out and you put in a higher accumulation range, that can also be another good place to buy.
So it seems like if there was going to be like a 30 to 40% correction here, that would take you down to kind of like low to mid 30,000 range on BTC.
Yep.
I think that'd be healthy.
Yeah. You know, 40K is prior resistance, now turn support. That would be, you know, about 30% off the highs. And you can see, I mean, we've got the moving averages. I use the 100 period and the 200 period. These are going to catch up over time. But if we got another, you know, day or two where we got super deep and even bounced off the 100%, I mean, that could be a nice fast kind of rip to the upside. Those are a little more advanced. Like your average person that doesn't understand price action is probably going to not do that efficiently. And it's uncomfortable, you know, buying dips against blood. It always feels kind of gross because you're like, or uncomfortable. Rocky, aka Crypto Hustle, another mentor in our community, he's just a beast at catching dips. I prefer breakouts. I just think they're easier. But those fast,
I like bloody dips personally.
Yeah, you guys like them?
Oh yeah.
Yeah, they're great. I mean, because the counterforce moves are often so large and so fast.
Well, and also the flip side of this, let's say that this is just going to be a more shallow pullback and it holds up from here and it breaks out again.
Yeah.
Through what's the all-time high?
58K or
58 breaks out
58.
through that. That for me, I would be immediately thinking, okay, this isn't taking much of a rest on these corrections. It's very, very strong. If it does end up, you know, pushing high into whatever the next target is, set 100,000 or whatever.
Yeah.
I would be thinking even more so then, okay, it hasn't really rested much. This is a really strong move. I would be feeling more compelled to take profit into a move without a deeper correction from here.
Yeah,
if that makes sense.
Yeah, because it could be a dead cat bounce for lower lows, right? So that's always, when you're in a bull market, it's impossible to pick the top, right? Like sometimes you get fundamental events that can help you with timing. Like in 2017, it was the CME futures launch. Rocky put out a market report and nailed it. He's like, look, this will likely cause a tremendous amount of selling pressure. Be careful at this zone. Sure enough, that was the pivot top. So when you're in a bull market and you're seeing these runs and retracements, you never know how high it's going to go, but there are signs of a shift in market dynamics. And so, yeah, if you got a sell off and then a weaker bounce, and then it created a lower high, and then you started to roll over from there, yeah, that could tell you that, okay, this immediate bull market is over. We're going to need to slap some of these hodlers real quick.
That's really important because these 30, 40% retracements that have historically been good times to buy are valid until you hit like a 2017, 2018 bear market where that doesn't actually become a good buy opportunity.
Yeah. And a lot of times you don't know until it's happening.
Yeah.
And that's the problem. That's why
you have to stay engaged.
Right.
Yeah.
Cool. Well, let's go ahead and jump over to stocks. And if you guys have any questions, you can feel free to start throwing them in the chat there. So as of right now, tech's been getting hammered pretty hard. Really just a 2-day slide here. And overall, I mean, we're just pulling back to support.
Yeah.
What are you guys feeling or thinking around this?
I mean, I obviously, you know me. I think that corrections are healthy, and this is a good thing for the markets overall. But the thing that's kind of spooking investors is that we are seeing this shift. We're seeing Treasury yields start to creep up, which usually, you know, stocks kind of roll over. It's inverse for the most part, and so that's a concern. Inflation is a concern going forward. So I think that all of that combined is spooking people that are invested in equities. And I think that Travis and I are pretty prepared for this. I mean, we've kind of known it's coming. Most people have known that it's coming that are pretty involved in the markets. The question is, I guess, and Trav, this is a good place to kick it to you. How do you, how do you see this playing out in terms of can the equities market continue to truck higher, or at least stay elevated with bond yields rising?
Depends on the speed. The equity market, so you point out a lot of really interesting points. There's a big fundamental shift happening underneath. It's kind of a mega shift. We don't get these very often in the markets, but there's a very major shift happening underneath equity markets right now, and that is a repricing of inflation risk. We haven't really had this since like 2018, when we had that big 20% correction because the Fed was aggressively raising rates. And now you have some added dynamics, because it's not just treasury yields that are going up, although those are a great signal that inflation expectations are rising, but it's also that we have record amounts of deficit spending. We have commodity prices are up dramatically. I believe like some of the commodity indexes are up something like 70% in the last year, and you have specific commodities like ag commodities like sugar, corn, soybeans, wheat, all up.
Lumber just broke $1,000 today.
Lumber's up massively. Crude's up massively. I think crude's up like 20 or 30% year to date. So we have a significant increase across a lot of different commodities. And not only that, but you've got a reopening and reflation trade where a lot of the coronavirus numbers are dramatically down, both in the U.S. and globally. I think the U.S. numbers are down something like 45 or 50% in the last 2 or 3 months in terms of case volumes. Globally, I think they're down about 35, 40%, and the vaccination efforts keep ramping up. So you have this now return to more normalized levels of economic activity being forecasted for the rest of the year. I think we're going to get inflation levels that are going to really spook people. And the market is just now figuring this out over the last couple of weeks.
What levels are you projecting for inflation?
So it really depends on what you're using as your gauge, right? I mean, if you're using the CPI, like the US CPI, you know, it's still at like 2-3%, and the Fed really watches that closely, but there's lots of other ways to measure inflation. Some people look at things like the Chapwood Index or commodities. Those have their own limitations because they don't necessarily represent the average categories of spending of your average consumer, right? But I think even the CPI will be up more than 3 or 4% this year, and that is going to look really weird because we haven't had that in many, many years.
And we've talked about this, how inflation is kind of a self-fulfilling prophecy or a self-feeding animal, right? Once there's a little bit of expectation, that expectation feeds on itself and people start repricing things in anticipation of higher prices. That's what we saw back in the 70s with the inflation. It fed on itself.
Yeah.
And I've been thinking a lot about this too over the past couple of years, about how the narrative of rates are going to be zero forever. And that's the expectation. And nobody has really been beating the drum of like, yeah, no, inflation can pop up out of nowhere and scare the hell out of people and dramatically shift that narrative too.
Well, and a lot of people are expecting the Fed to keep rates low through 2023 at least. Yeah. Right? So I guess if the Fed doesn't end up doing that and they have to intervene if inflation gets too out of control, that's really going to be a problem for the market, because the market is like, hey, no interest rate increases. The Fed's going to let the economy run hot. And I guess if they don't stick to that commitment, that's going to be a problem.
Yeah.
Yeah, it's going to be interesting to see how they react, I think, later in the years, call it like Q3 timeframe. Because right now, they're definitely still staying committed to bringing unemployment levels down and keeping short-term rates around zero. Like, if you look at the curves, the US 2-year is basically flat or down over the past couple of months, while the 10-year and the 30-year have been rising dramatically. So we call that a curve steepening. So essentially, the yield curve is steepening pretty dramatically. And the Fed, you know, most of their actions lately have been around the short-term part of the curve. So it'll be interesting to see, like, later in the year, are they going to look at potentially raising rates? How long do they stick to this hard policy that they have right now of keeping rates low until unemployment goes lower?
Right.
What are they going to do if CPI is ticking up to 4 or 5%, but unemployment's still at 5 or 6%? You know, that is a real conundrum for them. So it'll be interesting to see how they handle that. there's all these weird structural things too in the supply chains. Semiconductors are short right now. You know, a lot of the stuff we talked about during the pandemic, like fitness equipment and even I think clothing, some areas like that, lumber, housing materials, copper. You know, we here in Texas, we had the big winter storms. People are having to replace their pipes. I had a busted pipe. And so we can't even get our hands on copper pipes right now. So there's all these weird structural things in the supply chain that are going to contribute to the inflation numbers this year. And if it does create this self-perpetuating cycle where people now expect inflation to keep rising, then people are going to start behaving in ways that may even further inflation. So hoarding and things like that, it could get really weird. And
we can see this reflected in the charts, right? Like looking at a copper monthly chart, we're about to break the all-time high. Obviously, you know, lumber just broke $1,000 after spending many decades in between like 250 and 500. I'm talking to, you know, several builders I know that are just like kind of freaking out about that and having to write in variable pricing into their contracts. So there are these signs of just things getting weird.
Yeah. And so we've been thinking about over the past couple of months about how we position the portfolios to like protect capital and even potentially get into some positions that will continue to grow capital in markets that are going to be, I think, pretty skittish. We're already seeing it in the last couple of trading days, but let's talk about growth stocks. High multiple concept stocks, growth stocks that don't have profits, that may be growing rapidly, or maybe they don't even have revenue yet. You know, investors have been piling into these things over the past 2 years and making great returns on a lot of this stuff. You think about some of the no revenue SPACs, some of the electric vehicle stocks, NIO, you know, Li Auto, Lucid Motors, the whole CCIV thing. People were bidding that stock up 500% before the deal was even announced, right?
Wow, that's down a ton.
Yeah.
Big gap down today.
Yep. Concept stocks like Virgin Galactic, SPCE, they haven't even had a successful launch yet, right? There's all these stocks have been bid up massively to crazy valuation levels. And maybe those companies will eventually go on to fulfill their promises. But in the short term, these things have been run up so much. And these growth stocks, low interest rates helps that, because when you have no opportunity costs, if you can't go get a 4 or 5% yield in corporate bonds or government bonds, then why not invest YOLO into some growth stocks, right? So that's what investors have done over the past couple of years. But now, if you start looking at a repricing of interest rates and you start looking at corporate bond yields starting to tick up, well, if you can go get 5% in some really safe corporate bonds, then why would you go invest at something at 200 times earnings?
Yeah.
So there's some opportunity costs now creeping in. And so this can pressure high multiple growth stocks. That's why we're seeing the Nasdaq and some of these Momo stocks sell off so hard the last couple of days. That is a trend I do think could continue as we go forward into the year. Maybe not quite as sharp as we've seen today, but these stocks could start to lose some of that valuation premium, and you could see a shift of dollars into, or investment capital into, maybe some more value-based plays or reflation trades. So that's kind of what we're thinking about. It could also potentially even help assets like gold or maybe even crypto. Obviously, crypto has its own dynamics.
Yep. But it is tied into the global macro picture. And, you know, with inflation, I mean, that is one of the driving narratives of Bitcoin is, you know, and, you know, just looking at a super long-term chart of the Nasdaq, you know, this run right here is dwarfing the .com bubble. And granted, you know, things are somewhat different today, but yeah, I mean, the NQ's just been on a rip the past few years, and eventually we need a shakeout.
Yeah, for sure. You look at a lot of the performance, even of some of the top stocks, you know, great companies that are delivering lots of profits, like Apple. You know, Apple has had significant multiple expansion. Now, some of that's probably warranted because they're, you know, buying back stock and they have had great success with some of their new products. But, you know, you're paying a lot more per dollar of earnings for Apple today than you were 2 or 3 years ago. So that valuation multiple expansion can reverse. And so there is some risk there that, you know, you do have a cooling off, if nothing else, with some of these hot areas of the market. So
keeping a close eye on that.
Definitely. And if you're overexposed in your portfolio, as probably a lot of these TikTok type of investor people are, to high growth momentum story stocks, you need to look at your portfolio and be prepared for significant drawdowns. And frankly, that would scare me. I wouldn't want to be overly invested in highly correlated story stocks that trade at crazy valuations.
It's actually funny because we talk about diversification all of the time as, you know, financial planners. And now diversification is really starting to show its value right now, because if you were, invested across all the asset classes, Bitcoin, even maybe some bonds, and then commodities, a little bit of gold in there, some retail, some growth momentum plays. I mean, that really is starting to show really valuable right now.
Yeah.
So
yeah, there's we've talked about this at length. There's value in uncorrelated assets, and it just makes sense. I think when prices have gone up so much so fast, at a minimum, even if you sell nothing, you want to think through the bear cases and say, okay, what would I be doing, thinking, and feeling if the markets fell by X%? Would I be freaking the hell out? Would I be okay? Would I be able to weather that storm? What's my expectation, right? That's why we always talk about trading is just like poker, in that you are dealing with incomplete information with an uncertain future, trying to extrapolate the data you have to come up with the best decisions you can right now, right? It's just like chess as well, thinking about all the possible outcomes and how can I make decisions and plays in a way that is going to make me money and keep me safe no matter what the markets do, right? It's when people get too one-sided and they're like, oh, just hodl, fucking laser eyes, like I get that. I love it. I'm a crypto OG. I've been here since the early days, but I also understand how the euphoria and the panic of the markets drives prices. And that to me is just as important as the narrative of why Bitcoin exists. You have to understand that prices are driven by human behavior. And if you understand that, you can grow your wealth a lot quicker and maybe more efficiently than people that just buy and hope.
Now, I do want to say, as concerned as equity investors maybe are, especially growth momentum investors are, I do think that there are a lot of companies out there that are still doing amazing things, innovating, growing at great, healthy rates. And what I'm thinking is the opportunity when those volatile pullbacks do come, some of these names that I know we've been, wanting to own that have been out of our reach, we may end up seeing some really good opportunities come from this volatility for the patient ones that were not YOLOing into Zoom at, what was their price to
60
sales?
times sales.
Yeah, whatever it was.
Is that like the highest out of any stock ever?
No, but it's up there. It's probably in the top
Lemonade might
decile.
be up there now. I don't know.
Yeah, it's a top decile for sure.
But, I do think that there are going to be opportunities to own some of these names that that we've wanted to for a bit.
Yeah. No, it's great. I mean, that's why we take profit when prices are high, so we have more cash to buy when things come down.
Absolutely.
It's rinse and repeat. I call it the machine, right?
Yeah, I mean, not all these companies are going to die, because rates tick up. Some of these companies are going to continue to innovate and do well.
Yeah.
And there's still like some really undervalued stuff out there even now. Even before this correction this week started, like there's actually value stocks out there that trade for like half the market multiple that are growing. I have 2 new positions that I initiated this week, 2 new stocks that I bought, and they're they're solid companies with a lot of potential to continue to grow and trading at like very, very cheap valuations. So
it's funny how like 15 to 25% earnings growth or revenue growth has turned into like a value stock. Like what the?
yeah.
Like that's great growth. It's like, oh, you're not growing at 50% or more, I don't want anything to do with you.
Right.
It's kind of weird.
Yeah, it's funny. Yeah, 10% revenue growth is like, that's
that's disgusting.
Yeah, that's not good enough, and so people just ignore that. It's like if you can compound 10% revenue growth year after year after year for a decade, like you're probably going to be, one of the better performing stocks.
Well, it's funny because I actually caught myself. I'm doing some work on a stock, Poshmark, right now, and their revenue growth has decelerated to like 28%. And I remember thinking to myself, dang, that's not as high as I want.
Temper expectations, man.
Yeah.
Speaking of tempering expectations, let's take a look at some news. And this is actually pretty bullish, in my opinion. Today, the New York AG settled with Tether. I think it was, $18 million settlement? So basically nothing. So this is something that there's been a lot of FUD around, is the Tether FUD. in Bitcoin. And so if we can move past this, you know, people have been asking me the past couple of months if I'm concerned. And I said, not really. I mean, Bitcoin becomes harder to take down the more diverse the capital pool becomes. And now there's so many other competing stable coins that I think that's just healthy for the overall infrastructure of it. So yeah, I'm not worried about this anymore. Looks pretty solid. Also, one thing that I am more concerned about that in the short term just creates more volatility is, you know, all the I'm going to call it experimenting on the DeFi lending platforms. The more leverage that gets introduced and the more of these derivatives that people are playing with, the more inherent risk comes with that. And that's why, like yesterday, I sent a really long watch list to our community updating all my positions and my thoughts on everything. And kind of the key theme there was, guys, be prepared for altcoins to be way more volatile on a percentage basis than Bitcoin. The smaller the market cap, typically the larger the percentage moves, both on the upside and the downside. But just be careful, you know, with all of the new DeFi stuff, they've seen tremendous growth. But in the short term, you know, it can be kind of that reflexivity where panic begets more panic and, you know, liquidations happen. And before you know it, things are 80% off of their highs. I'm not saying that's going to happen to everything, but just be prepared for that. And that's why I've been scaling out on a lot of my positions, on these alt positions that I have. I have about, I think, a dozen right now. And I've been doing the same thing I did with Bitcoin, mapping out profit targets in advance. And then when I get there, not saying I hope it goes higher, but just scaling out according to my original plan. It just removes stress, you know?
And you guys have really crushed a lot of the altcoin trades over the last 3 or 4 months.
Yeah.
But it's nice to, like you said, like harvest some of that, especially as things get a little bit more volatile.
Yeah, you know, again, I've had the mistake in past market cycles of underestimating how far this stuff can go and closing too much too soon. So this time I've been trying to be a little more patient. But again, like, I want to do what I can to smoothen out that equity curve. I don't want to have an 80% drawdown in my overall crypto portfolio.
Yeah.
You know, I can stomach it, but I want to lighten the load when prices are high, have that capital sitting on the sidelines. And it's funny because even people I've been talking to on our community that have been taking profit, they're so eager to put that cash back to work immediately.
Yeah.
And I get it. I'm like, yeah, you made a shit ton of money. You want to keep it going. It's like, if you're hot at the blackjack table, you know, it's like, that's when you push the limits, right? But with the markets, it's like you have to know when to press the gas and when to step on the brake a little bit.
Flat is a position too, and it's probably your most important position.
Yeah. You don't have to be in a trade, like, you don't have to be long or short something. You can be in cash and be waiting, and that can oftentimes be the best thing to do at that moment.
Yeah, that's a great point. Even when I was at the hedge fund, there were times where we would take our exposure down pretty significantly just to, like, when we were in a weird environment where we didn't feel like we had a good handle on what was happening, we would sometimes either put on a hedge or bring down some of our position sizes to just try to kind of reset and take a step back and reevaluate everything, and even maybe further some of our research work to get more comfortable with the prices on some of our stuff. So yeah, I think that's really helpful for those that are especially feeling like really uncertain, but also, you know, they've made quite a bit of profits recently, but you're kind of hunting trades, but you're not feeling as confident. Maybe in that case, take it a little slower.
Yeah.
Be a little bit more prudent this time. You know, don't find yourself, like you said, if you got the hot hand at the table, starting to double your position sizes, triple your position sizes, trying to, like, you know, go bigger and bigger and bigger.
Yeah. Yeah, I think this is all really helpful. Hopefully you guys are loving it. I mean, this is literally what's made us millions over the years. So we just want to share what we think works. See, we've got a few other news pieces, and then we can jump into some Q&A. What's the deal with, you know, we can do this quickly with, you know, with the new recovery packages and all that
Basically,
stuff.
more helicopter money.
Yay, free money. Drive those prices
more
higher.
Stimulus potentially on the way.
Yeah.
I think the House passed the bill, the House passed the bill, but the Senate still needs to pass it. They're probably going to go back and forth and disagree on things, and who knows? But they're trying to get it done before the end of the month. I don't know if they will. We'll see. There's some unemployment benefits expiring soon. So I think that's the rush. But yeah, potentially more money coming to people, to Americans.
Bullish for Bitcoin. And I mean, honestly, the stock market too, right? And inflation. Like,
yeah, that's why it's just so weird, this whole dynamic that we've got going on right now, because we do have the potential for more money to get into the hands of more Americans. You know, what's that going to do for equities? I don't know. There's just a lot of things at play.
Yeah.
Yeah, equities are not going to go straight down just because of the reflation expectations. Like, we're going to have some times where equities rip back, and we're going to have some you know, some return to, I mean, even today, like, people are buying up the dips on a lot of these momentum stocks. So
yeah, I've noticed that.
Especially if you get direct stimulus payments, again, that's probably gonna, a lot of that money probably will flow into some Robinhood accounts or some brokerage accounts, right, and go back into some of this stuff. So short term, it's always hard to know exactly what's going to happen and if this divergence between, you know, hot stocks and other stocks will continue. But I think as they look forward on a longer time frame, medium to longer term time frame, I still see this potential later in the year for the market to start worrying and really get concerned about the combination of the structural supply chain issues, the stimulus packages, the increasing rates, increasing commodities, all creating a situation where the Fed's going to have to do something. It's got to raise rates or pull back some of this hot money. So,
yeah. Okay, next up. This is kind of weird. Like, what are we going to call this? Like, required documentation of vaccination for travel?
Vaccine passports.
Vaccine passports. There you go.
Yeah. No, I think it's
Strange
a real thing.
Ethical dilemma.
In Israel.
Yeah.
I believe they actually are implementing this. If you want to go to a gym or if you want to go to a concert or something like that, it was my understanding that they have started implementing this. So I also read something about how they have an agreement with Greece that Greece will open the borders to Israel and vice versa if the people are vaccinated.
Yeah.
So is this going to come to America? I don't know. I doubt it'll fly.
Just like everything else, half of the people will want it and half of the people won't.
Yeah. Or maybe certain states will implement it.
Yeah.
I don't know. It's going to be really strange.
So I'm not going to inject my own bias here, but I will say that, how do I say this?
It's probably an inflammatory topic to begin with.
Yeah. No matter what we say, people are going to be pissed off at us for saying it.
But it's happening, obviously, so it's up for discussion.
Yeah. It's bullish for travel stocks, but I don't like the encroachment.
Is it, though? Is it bullish for travel stocks?
I think so, because, look, people are getting vaccinated at incredible rates right now. Like, it's still over 1 million a day, right? Those people, me included, want to travel again. And I know some people will feel safer if that's the play. But again, I don't like government encroaching on that.
I think ultimately there's a middle path. Like, I think about hotels and businesses like that, you know, may have to make decisions of their own. And some of them will probably choose something like, okay, listen, if you're vaccinated and you show your proof of vaccination, great, you're in. You can, you know, come to Hawaii and stay in our, you know, Four Seasons hotel. Or they might say, if you're not vaccinated or you choose not to get vaccinated, then you have to go show a proof, a test that shows that you currently don't have COVID.
Yeah.
You know, and that's kind of a reasonable middle path. Even some people will push back against that.
Yeah.
But listen, you know, this is a society where where your actions affect other people. So there's got to be some level of, you know, personal responsibility and you know, trying to do the right thing for your fellow man.
Yeah, that does make sense, right? Like either vaccination or a negative test within a certain period of time.
I hope it'll be more of that and less of the, like, you better be vaccinated or else you can't do anything.
Yeah, I think I don't see that flying in America.
Yeah, but hopefully not. I mean, look, we got really close to an authoritative regime, and we don't need government encroaching more and more like that. So
yeah.
All right, let's do some Q&A, guys. We've covered a lot. We're going on an hour. See some questions here in the chat. If you guys have questions about Bitcoin or stocks or
Bitcoin or stocks,
any of the other assets, or just anything in general, let's go ahead and run through these. So, Is the sell-off feeding into DeFi or altcoins, or is everything correcting? Yeah, you know, altcoins are actually down on a percentage basis more so than Bitcoin. So Bitcoin's down, you know, call it 10 to 15% today. And then you've got other alts that are down, you know, 15 to 25%. Some of the DeFi stuff has actually gotten hit the hardest recently. If we go down here, you know, you can see some of this stuff that had nice breakouts is now getting like really deep pullbacks, which I think is healthy in the overall trend. But yeah, you know, kind of like we talked about with the liquidations that are happening on the lending platforms, like this kind of feeds itself. So I think that's why we're seeing that. All right.
And there's leverage kind of embedded in the system, right? With some of the DeFi stuff, people pledging collateral, and then the value of the collateral goes down, so they get capital calls and things like that.
Yeah, I mean, there are like stop gaps in place. It's not like, in my opinion, it's not extremely risky, but it can lead to that kind of reflexive like rush for the exit.
Yeah.
All right. Question. I'm new to taking profits. I'm still about 2 to 3x since last week, I guess, in profit. Would you recommend taking profit at this time, or am I late as the drawback may be lessening and we're bullish again? So here's what I'll say about that in general, other than, you know, I can't give you personal financial advice, is if you are trying to figure out when to take profit this late into a trade, it's too late. Like, you want to predefine those things before or right when you get into a trade. Like if you're in something and then price is coming down and you're going, oh shit, what do I do? It's too late by that point. You haven't planned your trade. And that's how people end up being a bag holder. And they go, oh man, I was up massive. Now I'm underwater. Well, I might as well just hold, you know. And no matter the amount of people that say, well, I would never do that, a lot of people end up doing that just because that's how human behavior is. So what I would say to anybody that's looking at the markets now going, okay, I've made a lot of money, what do I do? It's map out the bull and the bear case. Well, what if Bitcoin does fall, you know, below 30K again, and we go into a bear market? What would I have wanted to do at this point? Or what if it rebounds? And usually, just like everything in trading, there's a middle path. You don't have to be all in, you don't have to be all out. So for me, I've scaled out about a quarter of my Bitcoin breakout trade, and I'm holding for more, but I've taken enough profit off the table that I don't have the stress of these pullbacks.
Yeah.
Made a lot of money, and I can hold for higher prices, or I can hold for a deeper pullback. So yeah, it's really hard to go into more depth into that on a show like this, but you know, again, it's all about just predefining your targets.
And there's tax considerations for people too.
100%. Yeah.
I'm actually sitting on some positions where I probably would have already taken some profits if I was in my long-term capital gains window, but I'm like a month away or even a couple weeks away from getting long-term capital gains treatment on some of this stuff. So I'm just kind of trying to hold through this, but
yeah,
you know, you may have some tax considerations with when you decide to sell as well that are important.
Mm-hmm. Yeah, absolutely. Timing matters. Taxes matter. Chris, what are your thoughts on alts? We don't even have an alt season this far into the bull market. I mean, I would disagree. We've absolutely had an alt seain. We made a ton of money on alts.
Aren't you in alt season?
Yeah, I mean, I've got a dozen or so positions open, been scaling out along the way. But again, that's the thing. Like when you have alts that are popping off, you don't know how far it can go. Right? Like in 2019, we saw the kind of the inklings of an alt season, but it got cut short. So that's why, you know, just risk management is so key. I don't try to guess how far things are going to go anymore. You know, we were trading Ethereum at $1.50. We thought we were geniuses at $15. A year later, we were at $1,400, right? Now we're sitting above that. So never underestimate, but also don't have just these moonshot profit targets where you're like, I'm going to hold everything until, you know, we get another 10x from here. I don't know.
I was going to say.
All right, let's see.
I wonder if we're finally going to get that US based Bitcoin ETF this year, because there's a couple of interesting things at play now. There's the Canadian ETF launched and raised a ton of capital right off the bat. So, all those ETF sponsors are hungry to get that Bitcoin ETF launched.
Yep.
But also now you've got Gensler and some maybe more friendly crypto regulators in the US.
Yeah, I think it's coming. I mean, we saw Canada, they're jumping in that game. We got Gary, the head of the SEC. We've got also the CFTC and the OCC. You got all the C's that are coming out with crypto friendly and I think very pragmatic people.
Yeah.
It's people that understand the risks and don't want the blatant bullshit scams in the space, which I don't either, because that ultimately puts a scarlet letter on crypto and makes it harder for the real stuff to survive. But they're friendly and they understand innovation. So
now Bitcoin's mainstream.
Yeah. So satisfying to see it.
Yeah, that's why I would love to see like a really gnarly 40% correction to like get heavy again, because I'm not convinced the bull market's over yet personally. Obviously we talk about probabilities and possibilities, right? There's still that probability out there that we did see a local top for a while, but I just look at the dynamics too of what we've been talking about with the reflation stuff and Bitcoin being a scarce asset versus all that. So like I see still some pretty positive dynamics out there. I would love to see a nice gnarly correction to try to make the position bigger.
On that note, Peter says, will you be adding Bitcoin if it pulls back to 33 to 42K?
Well, that's a big range.
That is a big range.
Yeah.
But is there a price level that you guys would be adding?
Low 30s for me, I think.
Yeah.
I can see
it depends
that.
on how fast it gets there too.
True.
Like if it's a slow grind, I don't try to buy slow bleeds. Like the only time I really like to buy is when you get that rush for the exit and everybody's panicking, and you can just, if you watch the order book, you can just see the market orders of people just barfing their bags on the order book. That's where I like to go. All right. When is the pivot coming in? When is the pivot coming in? And I'm decent at it, but Rocky, aka Crypto Hustle, is way better. He got almost the low last March in the low 4K range, where I was like more in the 5-6K range. Yeah. So I don't know. I'm okay at buying dips, but if we got a really juicy like 3 to 5 day slide or so, I'd be buying somewhere. What you do is you map out the high probability support areas, and then you let price action be a guide, and you watch it if and when it happens, and the speed in which it's happening tells you when that pivot's going to come in usually. But you've got to manage risk through sizing. If you get in and you can't handle a 5% drawdown, dip buying is not for you.
Yes.
Yeah.
Yes.
I'd say I'd be watching that 30K range for sure.
Yeah, I mean, 30, 35, there's a ton of support in there.
Yeah.
But again, if it's just a slow grind, we can put in lower lows and lower highs and go into a multi-month bear market too. So just got to watch and wait.
Yeah.
Yeah. Trading is a balance of anticipating and then responding. Right? You create plans and you anticipate and you set up.
And then analyzing.
Yeah. And then you wait for it to play out, and then you either stick to your plan or you make adjustments to it.
Yep.
Yeah. All right. Let's see. We'll do a few more questions and then wrap it up for today.
How about where do you redeploy your capital that you've taken profits on?
I hear boats are a great investment.
Trucks.
Yep, trucks, boats.
The more depreciating the asset, the better.
Yeah. What you want to do is you want to take your highest appreciating assets and find the biggest depreciating asset you could find.
He's joking, y'all. I hope y'all
sarcasm.
get the sarcasm.
Half joking. I love boats.
I mean, listen, you definitely gotta, enjoy your profits along the way to some extent.
Absolutely.
Gotta have some toys, right?
Look, the way I think about it is like opportunity cost, right? Like, say I'm going to take, 100 grand or like 500 grand out of a market, and then I'm going to put it into something. Okay. What do I want to do with that money? Do I want to continue to grow it, or do I want to sacrifice the future gains for a fun boat or a world trip or whatever? And then you go, yeah, I'll sacrifice a quadruple in 10 years or 20 years for that experience today, right? There's a balance.
A lot of people are going through this right now trying to figure out what to do with their profits that they've realized.
Yeah.
And what I've been telling some people is think about how much risk you want to take with that realized profit from here, right? Because if you're saving for a goal, or if you made enough money to pay off your house, or you want to be careful with the risk that you put on with that money to make sure that you don't lose it, right? So you can reinvest it in different risk buckets,
Yeah.
basically.
Yeah.
Take some, put it in your IRA and invest it in an index fund, or take it and pay off a mortgage or a high interest loan, or something.
This is where your world comes in.
There's different ways that you can take the capital and redeploy it depending on your financial situation. Or maybe you're just in accumulation growth mode, or and your goal is compound, and you're okay with reinvesting it in equities or more crypto on pullbacks or whatever.
Yeah, but you don't have to do it right away.
You don't.
You said it earlier. It's like you can have your cash position grow for a little bit of time. A month, 2 months, 3 months. It's okay. Like you don't want to have a massive growing cash position for years and years and years. But for a couple weeks, couple months, like you can chill. You can have that profit just kind of sit in for a little bit.
Reevaluate. There's always opportunities that come and go.
I've been feeling that too. Like I have more cash right now, like fiat cash, that I'm comfortable with, because we know with inflation you're going to lose 2, 3, 5 or more % a year. So I think about that. I'm like, on $1 million, you're paying basically $30K a year for that optionality to have that. So like, people that I talk to, like entrepreneur friends that we know that keep millions of dollars in cash, I'm like, well, why? Like, do you just like to feel rich with the cash? Because you're paying, you're losing every year. And a lot of people don't think of it that way. But also, sometimes it is better to pay for that optionality so you can wait for juicy opportunities and you're not just piling into stuff, because then you'll end up buying a top and then actually being underwater.
Yep.
Or some people are just extremely afraid of risk.
Sure.
They just do not want to take on any risk at all.
Yeah.
Probably not most of the people watching.
Got a question about day trading. What's the percentage target for day trading? We don't day trade. Almost all day traders lose money. Day trading, by the way, is the act of hyper scalping in and out of stuff. The markets are so efficient today and so random at the same time on a short time frame. Almost nobody makes money day trading. That's why we swing trade and position trade. We trade less, we profit more. That's our motto, that's our goal. And if you're day trading, you're going to lose money. You're going to lose money. The only people I know making money day trading today are either doing a front running scam, so like running a penny stock room and front running a bunch of people on illiquid shit, or they have an algorithm that actually has an edge that they have to continuously work on to keep relevant, which is very difficult because you're competing with multi-billion-dollar firms that have better tech and smarter people than you. Where I think the average retail person could win is swing trading, position trading, and then value investing over a few year time frame, which is Travis's forte. So it's my little soapbox for the day. I just hate seeing people still trying to day trade in these markets. Like 10 years ago, totally different story.
Day trading is a tool that should come out seldomly and at the appropriate time.
Boom.
It doesn't have to be no day trading at all. I mean, every once in a while I take a day trade. Every once in a while.
Yeah.
When the chart is right and the conditions are perfect.
Yeah.
And the risk reward is fantastic. And that's fine. It's a tool. It should not necessarily be your everyday driver. Unless hey, if you're really, really good at it and you're making 5% a day or whatever it is, like, good on you.
Yeah.
But
there's a reason why Wall Street got rid of trading floors like that for the most part.
Yeah, I mean, like, I would say it's probably less than 0.5% the number of people that actually have, like, in terms of all the investors out there or all the people attempting to day trade, it's probably less than 1% of them actually have a real edge that they can exploit consistently.
Yeah. Yeah, I'd agree with that.
Especially the ones that are trying to do it on a day-to-day basis. Every day the market's open, they're trying to do it to generate income to live on. I've just seen a lot of people churn and burn with that, personally.
Death by 1,000 cuts. Yeah. What are your thoughts on recent hot IPO stocks? We talked about Poshmark earlier that have fallen from their IPO highs. Is now a good time to enter?
Well, we love looking at busted IPOs for potential opportunities, but not all of them are going to be good opportunities. So you can't just blindly buy IPOs just because they're down, especially in this market where a lot of the IPOs are actually coming out at like double the valuation at where the initial IPO was priced.
Yeah.
So even when you see a stock chart coming down from its first day price, it may still be way above the valuation that it was done at the actual IPO itself. So
Airbnb kind of went public at the
Airbnb.
perfect time, didn't they?
Yeah.
Right at the height.
you know, Airbnb priced, they sold stock in the IPO before the first day of trading at like $65 or $70 a share. First day, it doubled. It went to 140. Now it's, you know, that it went over 200. Today, you're like, oh, it's coming down. It's having a correction. Even if it got down to like $100 a share below its first day trading
I
price.
still want to see it lower.
Yeah, it
Yeah.
would still be trading above its actual IPO allocation price. So
What's one that did this that came out hot and then it had a multi-year like death spiral?
well, there's Tilray, of course, but you know that's seen a little bit of a bump lately.
What about
but-
like GoPro?
mean,
I think is one.
GoPro.
Right?
Oh, GoPro.
Yeah, GoPro.
Twitter. I mean, at
Yeah,
Twitter.
for a long time, Twitter was
kind
underwater.
of took
Yeah,
a
like
dump.
oh yeah, we've talked about this one in the past. Yeah, so like GoPro came out and it ripped from like 30 to 90 or 100, and then it had how many years of just shit.
Yeah.
Basically topped out what like mid 2014, and it still has not even come back anywhere
Yeah.
close.
Yeah.
Poor GoPro.
Yeah, Fitbit, Blue Apron, they're also similar examples of this. So yeah, not every busted IPO ends up being a good investment. So it really is a case-by-case basis. That's why we do fundamental analysis. We teach that in the stock boot camp. We teach that in the community. But yeah, I mean, I know you're looking at Poshmark specifically. I don't
Yeah.
think you've come to a conclusion on that one yet.
I kind of have. I mean,
Oh, you have?
to
Okay.
be honest, I'd like to see it, you know, cut in half from here. The market cut in half from here. You know.
Yeah.
Oh, good. Okay, so this is good for me.
There you go.
Yeah, I was thinking, you know, right now it's at a 5 billion market cap. When you look at its, you know, price of sales compared to like Etsy, it's actually not at a discount at all. And so, and their growth rate kind of slowed from 2019 to 2020. And there's a few other things I won't go into, but I would like to see this at maybe a 2.5 billion market cap if I can. But
Yeah.
the problem is
Yeah.
with this current market environment, you don't know what's going to happen, because I wanted this on a Sauna, which is a
Work productivity
software website, and I was like thinking the same thing. I wanted to see it kind of come down a little bit more, certain target level, and sure as crap, it ended up just skyrocketing higher. So it's kind of hard right now, but I have JOMO in those situations. Like, I'm not going to chase into something and
Explain what JOMO is for anybody that doesn't.
joy of missing out.
Instead of FOMO, it's JOMO.
Yes. And so like when I looked at Asana, I was like, man, I wanted that, but I wanted it I didn't want it at the valuation that it was at the time.
Yeah.
So great for everybody that was able to profit off of it, but I'd rather just wait. Like, look at it now. I mean, I'll wait, and maybe it'll come back down and I'll have a second chance opportunity.
Yeah.
But with the IPOs, it's tricky, because even Lemonade is another example. I have no interest in Lemonade, but that one I thought, no way, this is going to keep selling off, and it didn't. It spiked higher, and it's just crazy. So it's really hard to kind of predict the movements of some of these stocks, which is why I am leaning on valuation so that I can sleep well at night.
Yeah.
If I miss it, I miss it. You know. That's
Great
kind
point.
of
Same here. Yeah,
my
I mean, I'm
strategy.
fine missing most of these IPOs right now, and I think that given all the SPAC volume and IPO volume that we are getting and that we've had over the last 6 or 12 months, eventually a lot of these are going to wash out. You'll get pressure from the sellers, you know, the insiders. Once the lockup expires after 6 months on some of these newer IPOs, you can get added selling pressure. So that, plus if you get a market correction, some of these can be down, you know, 50% from where they're at. So I think being patient, doing the work, but being ready and knowing your buy target and just waiting and not FOMOing is, at least for me, that's the way I'm playing it, and sounds like the way you're playing it too.
That's
Yeah.
also, so in the crypto world, I feel similar, right? Because valuations are like, what the hell? How do you,
How do
you
you
know,
even-
fundamentals on, especially on the DeFi stuff, like I can come up with mental models and I'm like, this could be worth $1 trillion or it could be worth 0. I have no fucking clue.
Yeah.
But that's why, you know, just riding momentum is great. And the charts in crypto are just amazing.
They really are.
They're so reliable, like accumulation ranges, early breakouts, like they just
It's a
work.
technical analyst's dream.
Yeah. I mean,
Crypto.
we've just been nailing the last year. But to your point, like you can have that FOMO start to kick in when you're not catching everything. And then I look at my portfolio and I'm like, oh yeah, I'm not going to catch everything, but I'm like, I've only got 5 or 10% cash right now. So I am pretty fully invested. And then I've been able to pull out of that some, right? Taking profit. But I would just tell anybody that's watching this, like, if you find yourself feeling enticed or getting sucked into JOMO or FOMO, where you're like, man, everybody's getting hilariously rich except me, that's the time that you need to be careful, because you'll probably end up buying with the TikTokers at the top. So.
Yeah. There's only, I'm looking at my recent IPO list. There's only 1 or 2 that are even close to where I would be considering an entry. So I'm looking at, I have a list of like 40 or 50 or so recent IPOs over the last 12 to 18 months. And I'm literally, I think there's only 1 or 2 that are even close to an entry point for me. That just shows how hot these recent IPOs have been.
Yeah.
It's good to have context, right? Like we take the top-down approach thinking about the markets. Like, A, what are broad market conditions? Where are we as a whole? Are things overheated? Are they undervalued? Then go down to individual plays and then down to the trade setup and then the entry and the risk management plan.
Yeah, and like looking at the volatility of some of these things, like Airbnb and even Asana that you just pulled up, I don't want that kind of volatility. Like that's cray-cray.
What's funny is if you think this is volatile,
like, no,
you gotta look. I know.
I know. Like crypto and stocks, it's like apples to cheese. I don't know.
Yeah,
but
it's dramatically different.
Like that's why I'm very keen on valuation, and that helps me sleep at night, because that would not help me sleep at night.
Yeah. Like think of this. So this is just an idea of the volatility in altcoins. Had a massive move 2017 in Ethereum. Look at the percent that this thing came back. 95%, right? Like, if you can't stomach those type of drawdowns, crypto is not for you. You've got to be careful here. So, by the way, for anybody that doesn't know, yes, I am still long Ethereum. I bought a bunch down here in the 300s. I added some to the position here through, I think, 12 and 1400. We had a slow grind, hit 2K, and then now we're getting a pullback to retest that breakout level. So it'll be interesting to see what happens here with Ethereum over the next few days. If it can hold this level, great. My first major target for this was up around 2,800. Will it get there? Who knows? We'll see. The thing about Ethereum is there's so many other projects that are tied to the network that it's super volatile on the way up and the way down. So yeah, we'll see what happens.
There's a lot of interesting fundamental changes happening to Ethereum, I think, this year as well, that kind of have an interesting dynamic as part of all of this.
Yeah, long term, I'm bullish on it. Short term, randomness takes over in the kind of the 2-day to 2-week period. You start looking a couple weeks to a couple months out, you can get a sense of direction and the bigger moves.
Yeah. Sense.
Roger asked thoughts on possible higher capital gains taxes coming.
Well, that's a good one for you.
Well, apparently it's only supposed to occur for people that make over $1 million. So most people are probably not going to get affected by the policies if they do end up passing.
Our community's probably concerned about that.
Our community is probably concerned about that. Hey, it's part of this. It's part of the simulation we're in, right? New president, new administration, new legislation. Like, this is what we're dealing with. And it's possible that we may see higher capital gains taxes. And it's going to suck for some people.
Yeah.
The highest tax rate is going to go up to, I think, 39.6% for not only ordinary income tax bracket, but also for people making over $1 million that have capital gains.
Yeah. And so that'll affect the short-term cap gains rate, and then
and long-term cap gains for those making over $1 million.
Yeah.
I think it's very likely that'll get done in the next 2 years at some level, but I doubt right now, as I'm looking at the possibilities and probabilities of this, the Democrats still need all of the moderate votes to pass legislation. So I think it's going to be tough for them to implement some kind of weird unrealized gain tax or transaction tax. Those proposals, I think, are going to be much more difficult to actually get passed.
I agree.
Whereas a increase in the high bracket rates, I think, is possible. An increase in the long-term cap gains rate is possible.
Yeah.
That, like you said, will have an impact, on the higher income brackets. But I'm not too overly concerned about some kind of just massive sweeping tax change that's going to totally upend the entire capital markets.
Yeah. One thing I'll say to anybody that's listening and going, well, taxes right now for me are not a problem because either I'm not at that level yet or I'm in a jurisdiction where it doesn't matter or affect me as much, or maybe you're paying more than that. Act as if you're trading with whatever your goal is. Like if your portfolio goal is $10 million or $1 million, whatever it is, like think about that number. Behave today in a way that it reflects what you would do if you had that capital already, because A, it'll help you get there quicker, maybe. And B, it'll just like add clarity to the things you need to do now, like tax stuff, even stuff like crypto security, hardware wallets, things like that, like not keeping all your coins on a single exchange, like act as if you are at the level that you want to eventually get to. And, talk to Nikki about tax strategies. You've saved us a ton of money over the years doing that stuff. What else?
I think that it also is going to come down to having a more of a hold on what your income is, after you are contributing to your retirement and all of the other things.
All your deductions.
Yeah, having control over that and understanding it. A lot of people have no freaking idea what their adjusted gross income is. Mm-hmm. They have no clue if they're, doing a standard deduction or itemizing deductions. I mean, some people do, but a lot of people don't. They don't know what tax bracket. They don't know their effective tax rate. They have no idea what their top tax bracket is. They just, pay the tax or get a refund and the accountant does it all.
Yeah.
Have some mindfulness over that stuff and learn it so that you can strategize when it comes to taking profits.
Yeah.
Know if you're in a year of higher income or lower income, or you can take more profits in those lower income years. All of that. So
very good advice.
Yeah.
Yeah, we talked about this a little bit earlier on the show too, but as the higher income brackets go up, the difference between short-term and long-term capital gains rates could actually widen. So the difference between holding a position for a couple months versus 1 or more years can actually make a big difference to your net return after taxes. Mm-hmm. So that's another reason to pay attention to your tax lots and when you bought and when you go long-term versus short-term capital gains.
Yeah,
so.
Especially with crypto, because unfortunately there aren't many ways to trade crypto tax deferred unless you're doing a self-directed IRA that allows you to open an account and trade, right? I wonder if that's going to come down the pipeline, if brokerages will eventually allow crypto trading in tax deferred accounts. That'd be kind of cool.
Yeah, Rocky's been doing that in Canada, and you can do self-directed stuff
IRA,
here in the U.S.
Yeah.
But, all right, guys, let's do one more question. I've got to teach a boot camp in 30 minutes. So,
All right.
All right, let's answer the question about leverage. I saw a couple questions about this. Do you use leverage when you trade, and what level? 3x, 5x? Personally, I don't use leverage at all anymore. It can work for you. It can also work against you. Most people that I see using leverage in crypto do it the wrong way, and they get overextended, and then they get liquidated and blow out their account. You got to learn risk management math if you're going to use leverage, and you have to back out worst case scenarios and make sure you don't get liquidated.
Know where your margin call is going to be, please. Know your percentage.
And know that on these shittier futures exchanges in crypto, there are flash crashes. We saw a flash crash yesterday on Kraken. Like, they happen and they will liquidate you, and you'll lose all your money and not know why. So there's an extra layer of risk in crypto using leverage that's just a little more risky than the stock market. I'll just say that. But I know you guys use it in certain situations. When do you use it and why?
I use it for day trades.
So if you're going to get in and out quickly?
Yeah.
What about you?
I use a little bit of leverage on things like shorts or hedges because you have to.
Yeah.
Essentially, if you're shorting or shorting futures or shorting stocks, things like that.
Shorting is its own beast, but
exactly.
Yeah.
So shorting is done on margin. So by nature, you're using I guess margin and leverage are technically two different things, but they're closely related. So shorting, there'll be some leverage if you're also occasionally I've done portfolio leverage when I get greater than 100% gross exposure in my portfolio. So that rarely happens. And at most, I'm only ever at like maybe 110 or 120%. So 1.2 times max leverage for me on a portfolio level. That's not on a position level. That's like on the total portfolio. And my portfolio is fairly diversified. None of my position sizes are that massive. So, you know, it's a manageable level of leverage. I would never use 3x, 5x on anything. Maybe on like one specific, very, very small position. You can also kind of adjust your position sizes, which is a way to sort of like inherently take more risk or less risk. So, yeah, that's not a comprehensive answer, but
no, it's good. It's good.
We use it situationally, but we're never like using like 3XR account or 5XR account types of leverage. I think that is just suicide.
Yeah, you don't have to do that to build real wealth.
Yeah.
Like if you look at the risk and reward of like, all right, I'm going to try to juice this with a ton of leverage, the probability of you losing everything goes through the roof. So maybe back it out.
Yeah.
Cool. Well, guys, thanks for being here with us. This is the first time we've been back in a couple months, man, between traveling and what do we call it? The ice apocalypse of Texas, losing power and water for a week. That was crazy. And it's good to be back. Feel free to go to wetalkmoney.com if you guys want to leave a question for the show. I know this week we mostly took questions from chat. Next week we'll get to the ones that have been submitted to us. If you want to join our community, you can click up here, join the community. You can get in our Discord group, come to live classes that we put on every week. And we'd love to see you guys in there.
Thanks for joining.
Yeah. Any final thoughts? What are you guys looking forward to over the next week, or anything that you want people to look out for?
Correction.
We'll be aggressively monitoring all the dips and trying to find opportunities. Beyond that, I'm just trying to still get warm. I don't think I felt warm
I know.
in like
I've been
month.
freezing in here. I'm like, gosh, why is it so cold?
It's been freezing for the past 2 weeks. I cannot get warm.
That's why I wear the jacket. I'm like, my bones just hurt. My old bones.
Yeah.
So
next time I'll wear my jacket.
All right. Well, hey guys, thanks for joining us. Hopefully you got some value out of this. Again, if you came in late, you can rewind and watch it. We talked about, basically what we've been doing in crypto, specifically how I've been taking profit and thinking about position sizing. We looked at a fun little TikToker and just the danger of market sentiment when it gets overly bullish and people start bragging about their paper gains and stuff. That's when the markets like to punish people. So stay safe out there, stay disciplined, and stay humble, because the minute you get cocky, the markets will slap you upside the head.
Amen.
Ain't that the truth?
All right, guys, take care. We'll see you next time.